Hello everyone, Justin with Deep Dive Stocks here. Today we're going to be doing our weekly review where we look at a weekly chat, this time from January 9th, 2023, where we look at the data that we had going into the 9th and what it meant, how we positioned ourselves for the market movements, and then ultimately a quick review of what the markets did and if they were in line with our data or not so good. So let's go ahead and get started. As usual, our first stop is with VoEx on SPY. And here, one of the things that we pointed out on VoEx is that it has been rising pretty steadily into the stable zone. And one of the questions we always have whenever a stock has been persistently downturned or with VoEx in the propagation zone for an extended period of time is when we start to see VoEx move into the stability zone or mainly out of the propagation zone, we always want to ask ourselves, is this a sign of instability? Meaning, is VoEx moving too rapidly, too quickly, like a VoEx spike? Or is VoEx actually rising nice and gently into stability? And with SPY, we noted that the movement was pretty modest and pretty well behaved and not very reminiscent of VoEx spikes or rapid VoEx appreciations into the inhibition zone, both of which would indicate too much instability on the index. But rather, VoEx was gradually moving with SPY into stability, which is a very medium to long-term bullish outlook. Another thing we noted is that QQQ's VoEx, however, really didn't share this stability. When we look at QQQ's VoEx, we see that it is much spikier, for lack of a better word, and very not gradually moving into the stability like the SPY's is. From this, we derived that SPY and some of the market as a whole were having gradually increasing stability, which is a bullish outlook, but something about QQQ, and as we see later on, something about the tech sector as a whole is still harboring a decent amount of instability. The next stop on the weekly chat is we looked at the market currents, which is a nice table that sums up the main components that derive or comprise the foundation of the market. And we see for the major indices that there's a lot of green, and that's pretty bullish. We see a lot of VOEXs for both the sector itself, so that's like the sector ETF, and for the average VOEX values of all the stocks in those sectors are nicely inside of stability. We see that LDPM crossovers are both numerous and bullish, and these data taken as a whole is a pretty bullish print, especially walking into the market on Monday the 9th. However, since the market currents table is just a summary, we looked at the individual VOEX values and looked at some main themes for the VOEXs that were behaving overall in a stable and overall in an unstable manner. And after doing so, we came up with a nice list that showed the sectors that were unstable and the sectors that were stable. One of the sectors that we noted was that the energy sector was pretty unstable. And this energy sector had a VOEX pattern that is called VOEX coiling, which is pretty reminiscent or pretty indicative of a future bullish movement or a future price outbreak. So with VOEX showing overall stability despite QQQ being a little bit more spiky than normal, and with the market current showing some pretty bullish prints, the next thing we looked at was the gamma trending metric. The gamma trending metric is designed to monitor the gamma inflow and the gamma outflow, modulated by some values to determine if it is reasonable to expect an increase or a decrease in the number of gamma squeezes market-wide. The significance of this is that when gamma squeezes increase, the market tends not to do well in the future, and when gamma squeezes decrease, the market tends to do much better. That is, if you're a bull. If you're a bear, reverse those statements. We can see that here in the market-wide gamma squeeze count that comes out in the macro report, that anytime the overall movement or the overall growth of gamma squeezes is negative, as indicated by this dark line below zero, the market tends to do well in the future. And then whenever that line is above zero, indicating that gamma squeezes are increasing at an accelerating rate, then the market tends not to do so well. So we see that it could be pretty important to be able to monitor or at least be able to have a tool to predict the growth of gamma squeezes in the market. And that is exactly what this GTM or gamma trending metric does for us. So if we take the GTM value and then we map the 5-day change in the number of gamma squeezes, we get a very nice association. Anytime the GTM value is greater than zero, we can expect a decrease in gamma squeezes in the future. and anytime the value is less than 0, we can expect an increase in the number of gamma squeezes in the future. Using this new tool, we looked at the data from the 6th or the Friday before the 9th, and the value printed is positive. Marginally so, but positive nonetheless. This means that we can expect a decrease in the number of gamma squeezes market-wide, and as it turns out, spoiler alert, throughout the week there was in fact quite a nice decrease in the number of gamma squeezes throughout the market. That was pretty nifty. One of the last things pointed out in the weekly chat is that the hedging environment for SPY was very perilous. Here we see the gamma hedging heat map for SPY, and notice that if volatility increased or if the price decreased, especially while volatility increased, a large amount of selling pressure would start to enter the market and thus propagate a downfall in the market, or at least SPY. But SPY is connected to a lot of stuff. So the concern was that if the early parts of the week experienced a decrease in price or an increase in volatility, that this could set off a chain reaction in the market, leading to a pretty substantial downside. However, you'll also notice that the opposite is true. Should volatility decrease, the market will start to be supplied with purchasing support, which would ultimately help bolster the market further in its price appreciation. And then lastly, actually this time, the last data that we looked at was LDPM, and it was noted that LDPM had sufficiently surpassed or sufficiently broken through many of the liquidity levels, and the next stop was the 1-week liquidity level. And the idea was that should the market move past that 1-week liquidity level, the overall outlook for the medium-term future is reasonably bullish. So hindsight is always 2020. So when I was writing the weekly report on the weekend leading up to the 9th, I thought that the data was pretty mixed. I didn't have the benefit of 2020 hindsight, and I felt that downside was the most likely, especially given the hedging environment and the influence distribution on the gamma hedging heat maps. But I did caution that should we see the LDPM breakthrough on the 1-week level, that things would start turning pretty quickly to a bullish outlook. And on Tuesday, that is exactly what happened. SPY broke through the weekly LDPM liquidity level, and the market rallied pretty substantially after that. As well, the number of market-wide gamma squeezes dropped. So those are the data that I ranted about the most in the weekly chat leading up to the 9th. And we see that although the overall interpretation of the data didn't quite pan out, the assortment and the configuration of the data gave a very clear path towards a green week. Namely, I just look at the LDPM on the 1 week. If it breaks through, perfect. Combining that with on Monday and Tuesday, a decrease in the number of gamma squeezes, just like the GTM suggested would happen. And the rest of the week was pretty easy, as bullish was the name of the game. And that's exactly what the data told us all the way the week before. That is a weekly chat in review. If you like these data, I definitely recommend, or maybe suggest, considering becoming a member. These weekly chats get sent out every week, where I just go over some data, look at how the foundations of the market are positioned, and what we might be able to do with that. So that's all I have for you guys this week. Thank you for dropping by. My name is Justin, and I'll see you guys next time. Bye.